Now, this morning's U.S. Bank Economic 360 with our focus on the stock market. It's recently hit all-time highs and measured by the Dow Jones Industrial Average, but there seems to be a noticeable lack of excitement and confetti in the air, so to speak. Economic growth remains weak, and more job growth would be very helpful. So, if this is the case, why are stocks at all-time highs? For insight, we turn to our expert, U.S. Bank senior equity strategist, Jim Russell, for answers. Jim, good to have you.
Good morning.
It doesn't add up. I mean, you know, you talk all the time about the need for more jobs, more growth, and yet the stock market keeps climbing. Why?
Yeah, Brian, a couple of points that I'd bring to light for our viewers here. Number one, stocks usually do well, and in fact best, when growth is slow. We have that now, as you'd mentioned, 2.2% GDP growth last year, something in the 2.5% range for 2013 is anticipated. An active Federal Reserve, which is also helping, a huge help to the stock market, no question about it, and low inflation. We have 2% inflation in this country. So all of those things really combine to be a positive for stocks. An improving trend is the key to the stock market. Now, you'd mentioned jobs. Let's go ahead and take a look at a graph that is going to be, I think, fairly explanatory to our viewers. We are looking at all-time highs in GDP, S&P 500 profitability, and dividends. You can see that in the blue line, but you also see in the green line that the number of employees used to get to those numbers is vastly short of where we were. In the financial crisis, we lost 8.8 million jobs. We've recovered 5.8 million jobs. Therefore, we're using 3 million less workers than we used to. I think that is the gap that most people are feeling, and that is not enough jobs, not enough growth. I still feel uneasy about the economic expansion.
But investors need some reason. I mean, stocks just don't go up.
That's right.
Why this optimism?
Let me point to three things that we think really justify stocks being at all-time highs. Number one, valuation. Stocks are not expensive. 14 times anticipated 2013 earnings. In our view, that's going to be $110 per share. Again, 14 times earnings, not expensive. Relative to bonds, very inexpensive. Absolutely no value from cash balances for investors. As mentioned just a minute ago, the Federal Reserve continues to be extremely accommodative, keeping interest rates low. That, too, is a positive. We don't feel that that punch bowl will be taken away until late this year or early next. Global trend. There's been almost 400 separate actions by countries, governments, and central banks around the world. It's not just the Federal Reserve and the U.S. government, but it's also a global trend to try to stimulate growth. Things around the world are also improving.
Give us a very quick glimpse into your crystal ball. What do you see happening in the next few weeks or so?
We do think that the market runs into just a little bit of trouble, and that is there continue to be Washington budgetary debates that are problematic. We think Europe is also continues to be in a recession, and we think that the Middle East perhaps will flare up. President Obama will be going to the Middle East literally next week, and we think that Iran, Israel, Syria will continue to be hot topics. So we're cautiously optimistic in the weeks ahead. But we are not surprised by the advance in the stock market. We think that it continues to drift up from current levels.
But a lot of variables. I know you'll watch them for us.
Yes, sir.
Thanks, Jim. We appreciate you and U.S. Bank.
Thank you.